are going to discuss about the tenet number 3 of the Dow theory. In this tenet, Charles Dow has spoken about 3 phases of the market. The first one is the accumulation phase. What is that? Suppose we can see a very sustained decline in a stock. Now a stage comes when the supply and demand of the stock actually matches. So no more the stock is going down. So a lot of consolidation, price moving little bit higher, lower, little bit higher, lower. Still there is bad news in the market, but actually value buyers are looking to buy this stock at this point of time. When this happens, for some period of time, we may see a major volume increase because some people are still trying to sell and those smart buyers are trying to actually buy the stock at the bottom. And at a point when all the overhanging supply pressure that was there, that is actually over and enough amount of stock has been bought by the buyers, the smart buyers, the stock actually starts moving after that. So the precondition of accumulation phases, there has to be a sustained down move before the accumulation phase take place, and after the accumulation, especially if it happens with volume, we can see that the price eventually moving higher, and this is called the market participation phase. What happens during that time as the price starts moving higher from a bottom? A lot of trend following people actually invest into the stock or trade into the stock. They see the price making higher highs and higher lows, so they understand an uptrend is in place, so they try to buy the stock and sell it much higher. So during this way, the stock keeps on moving higher, higher and higher. And if at some point of time the volume increases, that actually fuels the up move, and the up move takes much furious proportion. And in between up moves, there can be period of consolidations also that we will show in our example. Remember, these consolidations are not accumulations. Accumulation has to be after a sustained down move. So when we are talking about this consolidation, they are different from the accumulation phase. Now after accumulation and market participant phase, what happens is that at some point of time, the buyers who bought the stock much below actually sells, and at that point of time, the demand supply balance is again tilted. Now whatever people want to buy, there are enough sellers and the price don't go any higher. So this is called a distribution phase, and a lot of shares of the stock changes hand during this distribution, and a point is reached when after this distribution the selling pressure becomes higher than the buying pressure. That is, the demand for the stock is much lower, but there are enough sellers, and now when the price starts coming down, people try to exit on those occasions also, and eventually as the selling pressure goes, as people who might have missed the top tries to sell, and eventually the script goes lower. So we distinctly understand 3 phases of the market. First, after a sustained down move, there is accumulation, and then there is a market participation phase during which the price goes up and up and up, and then there is a distribution only after a sustained up move, and then again as the price starts coming down after the distribution, again market participation phase in the downward direction. So let us look at the aspects of what we define as 3 phases of the Dow theory through an example. So here we are looking at the State Bank of India weekly chart. As we can see that State Bank of India from the peak of around 2010 moved down to around the level of 150-160 during the period of 2014, and here a double bottom was formed. So this was an accumulation. First the market went lower, then it tried to went up, and then it was again pushed down, but It was a double bottom formation, and a lot of people, smart people, bought the stock here. Then the stock went up a lot, a very fast up move that we saw in the year of 2014, and then here there was a lot of consolidation. Now this could have been a distribution also, so one should have waited for the price to break out of this range, out of this flag kind of pattern that is being formed here. Now once the price actually broke out of this range in the upward direction, again the uptrend that was initially there actually resumed, and what we could see is that the price moved a lot higher. Then again there was a consolidation phase that started. Now we don't know beforehand if it's a consolidation or a distribution, right? But one thing is that from the earlier chart, this was close to the previous high that was formed around 2010. So as the price started moving below this range and then moved lower, and then the price bounced back a little bit and again started moving lower, we could understand that this was practically a distribution, and post this distribution the market was moving lower, and this was a scratchy move to say. As we can see, there has been consolidation many a times in between, but post this point the market moved lower with much force, and again a low was formed in a level similar to the previous lows, and again this was a consolidation. Again we didn't know that this was a consolidation or accumulation, because the price could have moved even lower after that, but as post this consolidation we could see that the price eventually break out on the upside. We could understand that the bottom has been formed here, and there was a lot of volume, lot of smart people have bought around the level of the previous low, and we can see again an up move started, and this up move was also a little bit scratchy, as we can see in between consolidation many a times, but eventually the stock moved higher. Now let us look at another example here. Here we are looking at again weekly chart of Reliance Industry. Reliance Industries, as we can see, from the year of 2005 odd to 2008 odd, had a phenomenal rally. From below 100 level to around 800 level, the stock went up. And then there was a little bit distribution, and then there was great recession around the world, and the stock actually after this distribution actually went down. Now again here there was accumulation. The price actually remained in this range for quite a bit of time, and there was huge volume. Smart buyers absorbed the selling pressure around this 350, 250 odd levels, and then the stock went up. Then set in a mother of all consolidation that lasted for so many years. Here you can see a very long consolidation from around 2009 or 2017 actually it lasted. And this 7-8 years long consolidation, the stock had a range of around 580 on the upside and 340 in the downside. But when eventually this huge consolidation was broken and the stock moved upside, see initially the stock actually halted a little bit, there was a consolidation, and then it went up with force, and then there was a consolidation and went up with force. So that is why it is very important to understand the consolidation region and to understand the which direction the stock is going. Now this was a level of previous high, right? So during this consolidation someone could have assumed that this is a distribution going on and the price could move lower. This is not a wrong assumption, but what happens is that what we could see that post this consolidation the market moved higher. So this was not a distribution, this was just a consolidation that is affirmed, and with a break of price in the upward direction we could actually see the price moving higher. Let us look at another example. Here we are looking at the HDFC. See in HDFC what happened is that in the daily chart initially there was the accumulation and there is a lot of volume, then the price went up, and then there was a consolidation move during that point of time, a little bit down move, then again an accumulation and the price went up, and in between we can see this kind of a consolidations going around. Now around this point of time, as the price was not moving higher, it was very natural for someone to actually think that this was a distribution, and you see that the price was giving some indication of going downward also. But as we could see here, as this range was broken on the upside, the stock swiftly moved from a level of around 1800 odd level to around 2000 odd level. So this was a very important or significant point from the perspective of a consolidation breaking on the upside. So yeah, we may have our understanding of the way the market may pan out, our guesses that the market may go downwards, but eventually what matters more is the direction of the breakout of this range, and based on that, if something we could have actually assumed to be a distribution initially could be rather just a consolidation and the price moved higher. So this is all about the third tenet of Dow theory. So let us discuss the fourth tenet of the Dow theory in our next video. Thank you for watching the video.